Welcome to today's Explainer, where we're breaking down the domino effect, and specifically how Middle East tensions impact your wallet. You know, if you've ever seen those heavy geopolitical headlines flashing across the news and thought, well, that doesn't really affect me, only to open your credit card statement a few weeks later and feel a sudden jolt, you are absolutely in the right place. Today, we're mapping out this invisible chain reaction. We're going to look at exactly how global politics, stuff happening thousands of miles away, connects directly to your personal finances. It is a fascinating, deeply interconnected web, and by the end of this, you're going to have a whole new lens for understanding the global economy. Let's dive in. Let's ground this right in your everyday reality. Higher gas, expensive flights, and creeping food prices. Imagine waking up tomorrow, pulling up to your local station, and boom, gas prices have totally jumped. Then you go to book a flight to see family, and tickets are noticeably more expensive. A few days later, the cost of your regular weekly groceries is creeping higher too. You feel it in your wallet instantly. It's frustrating, it's sudden, and it forces you to rethink your entire budget right on the fly. So what happened? When you're standing there at the gas pump or staring at your grocery receipt, you naturally ask yourself that, right? How did life get measurably more expensive overnight? Did the grocery store just decide to charge more? Did the airlines suddenly get greedy? Well, the real root cause of these sudden price hikes is almost never found in your local community. The answer actually lies thousands of miles away, in a region most of us only really hear about during major news events, the Middle East. It might seem completely disconnected from your morning commute in New York or a package delivery out in California, but the Middle East is the absolute beating heart of the global oil industry. And because oil is the fundamental energy source that keeps our modern world moving, when tensions rise over there, the entire globe pays very close attention. We are talking about the major oil suppliers here: Saudi Arabia, Iran, Iraq, Kuwait, and the United Arab Emirates. For decades, these nations have been the undisputed heavyweight champions of oil supply. Every single day, millions of barrels of oil leave these countries. That is the literal fuel powering cars, trucks, airplanes, massive factories, you name it. Because so much of the world's daily energy comes from this specific, concentrated group of nations, even a relatively small conflict triggers immediate global financial concern. The world just cannot afford a disruption here. At the very center of this massive supply chain is a remarkably specific geographic bottleneck called the Strait of Hormuz. It's a narrow waterway acting as a giant highway for energy, where a huge portion of the world's oil travels. Most people have never even heard of it, yet it's arguably one of the most important geographical locations on Earth. Picture a giant, crucial highway for global energy. Now imagine if there were whispers that traffic on that singular highway could be disrupted or blocked, even temporarily. The world would instantly start panicking about massive supply shortages. And this brings us to a brilliant quote that perfectly illustrates the psychology of financial markets. Prices don't just move because of what is happening. They move because of what people think might happen. Traders don't sit around waiting for ships to actually stop moving or for pipelines to shut down. The mere fear that oil supplies could be interrupted is often more than enough to send prices skyrocketing. It's wild, but market prices are driven just as much by anticipation and human psychology as they are by physical barrels of oil. Here is how that trader panic plays out in real time, because it happens at lightning speed. Step 1. Uncertainty is sensed. The moment investors catch a whiff of tension, maybe just a single news headline, they aggressively begin buying oil contracts to lock in current prices. Step 2. Investors buying those contracts causes demand in the financial markets to instantly spike. And Step 3. Demand and prices surge. All of this happens incredibly fast, long before a single drop of physical oil has actually been delayed. So you might be wondering, why should I care if oil prices go up? It's a totally fair question. If you don't trade oil contracts and you don't own a massive shipping company, why does a spike on Wall Street matter to your everyday life? It's easy to think it's just some abstract financial game. But here's where we pivot directly back to your wallet. It's really just simple math. First, oil prices rise. Next, transportation costs increase. Because remember, products don't just magically appear on store shelves. Food travels from farms to huge warehouses, onto trucks, and finally to supermarkets. Your online orders move through planes, ships, and delivery vans. Factories need immense energy just to manufacture things. So when oil gets more expensive, the cost to move all these goods shoots up. And finally, companies pass those costs to consumers. They aren't going to just absorb those losses, right? They hand that bill directly to you. And boom, this is exactly how oil prices contribute to inflation. It's a creeping, invisible tax on literally everything you buy. Even in America, which produces its own oil but is still deeply tied to global markets, you feel this impact. Families suddenly realize their paychecks aren't going as far. Discretionary spending gets slashed. So instead of eating out or buying that new appliance, everyone gets cautious. And when millions of people simultaneously decide to spend less, the entire engine of economic growth starts to sputter. Meanwhile, over in the stock market, there is a massive tug-of-war going on. You've got clear losers and winners. The losers? Airlines, shipping, and retail. Rising oil costs brutally crush their profit margins, so their stock prices often take a hit. But at the exact same time, you have the winners. Energy producers. Oil companies are suddenly generating way more revenue because they're selling their product at a premium. It's this volatile battlefield where investors are constantly trying to guess who's going to survive the spike and who's going to thrive. Eventually, things get so hot that the Federal Reserve steps in to combat inflation. Think of the Fed as the final boss of the economy. When oil prices push general inflation up, the Federal Reserve gets very concerned. It's literally their main job to keep inflation in check. So if inflation gets stubborn because energy costs just refuse to drop, the Fed has to use its primary weapon to cool the economy down, manipulating interest rates. This kicks off the Fed's chain reaction. First, they keep interest rates elevated. Because of that, borrowing becomes more expensive. Since loans cost more, businesses invest less and hold off on expanding. At the same time, consumers face higher credit card rates and pricier car loans, so consumers spend less. The ultimate, intended consequence of all this: economic activity slows down. So let's zoom back out. Look at how a geopolitical issue thousands of miles away becomes a global economic challenge. Talk about a domino effect, right? What starts as a localized tension near a distant choke point like the Strait of Hormuz transforms into trader panic, which spikes oil prices, raises transportation costs, causes grocery inflation, forces the Fed to hike rates, and ultimately slows down the entire global economy, right down to your local job market and your personal budget. Which leaves us with this really striking final question. Could rising tensions create a major economic slowdown? If tensions ease, markets calm down, oil stabilizes, and confidence comes back. But if they escalate, uncertainty stays high, inflation runs hot, and global growth faces some very serious challenges. So the next time you see a headline about the Middle East, you've now got the macroeconomic lens to see exactly how it might reach your wallet. Thanks for joining me.